Stocks on Wall Street rising Friday afternoon, shrugging off that report showing a spike in inflation in April. Let's dig more into inflation and its implications for stocks. We're joined in Santa Ana, California by Jerry Braakman. He's Chief Investment Officer at First American Trust. Good afternoon and welcome back, Jerry.
Thanks for having me.
Great to have you with us. So Wall Street finally got that long-awaited number that the Fed officials really focus on, that personal consumption expenditures price index. It jumped by the most since 1992. Why is Wall Street ignoring it or poo-pooing it, rather?
Well, I think when you look at where we were last year, literally it's a comparison year over year. And recall last year in April, which is where that comparison comes against, we were completely shut down or as much shut down as we could in this country. So when you look at price levels, remember at some point in April, oil traded at a negative amount per barrel because just nobody wanted oil. There was no demand because we were all shut down. Nobody was driving. The freeways were empty. And you look at today where we have this recovery, reopening, people getting comfortable, fully vaccinated, over half the population. And we see it from traffic trends in LA, almost near pre-pandemic levels. And when you look at places like Houston and Miami, they're actually above pre-pandemic levels. So activity is resuming. So we have this temporary spike on a really trough comparison last year. And I think the biggest question going forward is, once we kind of get through this comparison against that trough, where will inflation kind of settle?
Based on what you're saying, do you see no impact then of today's report on the Fed's monetary policy?
Well, I think it's expected. So this big print, we've seen it in PCE and as well as CPI, this comparison compared to last year, and the Fed has alluded that this is transitory. The big question is it transitory, and how much of it will claw back to a normal 2.5% level that the Fed is targeting? Because if we stay elevated, then we're going to have to see the Fed respond to that. And how that response gets built in really will drive short-term rates. We've seen the longer-term rates starting to get influenced by higher rate or inflation expectations. But again, not as high as they were before because it's been tempered a little bit. It's coming in along what people expect. But we don't know exactly how all this built up savings that we have. There's about 2.4 trillion in excess cash when we look at M2 money supply. That's still out there. Is that going to be spent?
President Biden today announced a $6 trillion budget proposal, ramping up spending on education, infrastructure, efforts to combat climate change. How should investors position themselves in light of that proposal?
Well, I think that's just another, a couple pounds of stimulus. We've already had, a lot of pounds just because this pandemic was so severe, such a severe impact to the economy. But what we see from Congress and certainly the Biden administration, and that will get tempered obviously by the Republican Senate, where they have at least a lot of influence. But there's no let up from Congress to try to spend and stimulate this economy more. And I think when you look, what can we expect going forward? If we continue to have fuel added to the fire, the Fed, waiting for rate increases until they see where inflation ends up, at least for the next, month or two, three, we should continue to see our economy reopen, economic recovery continue.
Jerry, so what stocks or sectors should investors be in based on that proposal?
Well, I think what's been working this year. So when you see what's been working this year versus last year technology outperformed the overall market by about 30%. This year they're lagging the market because those sectors like energy, materials, financials are all those cyclical type exposures that have really been working. And we think that's going to continue here for the next 2-3 months. Now, once we see how we transition from this spike in inflation to a more normal level, then we'll see whether that has legs going forward.
All right, but stay with cyclicals at least for the next 2-3 months.
Yes.
All right, thank you, Jerry. Our thanks to Jerry Braakman of First American Trust. I'm Fred Katayama in New York. This is Reuters. Have a wonderful weekend.